Randy Smallwood is joining us on the Mining Matters podcast today. He's the CEO of Wheaton Precious Metals. Hello, Randy. How are you?
Fine, Alistair. Thank you for the invite. Looking forward to this.
Yeah, it's going to be interesting. I think it's going to be good from our side, at least for the UK audience that we have, to find out a little bit more about you. You guys at Wheaton Precious are one of the largest streaming companies in the world, I would hazard to say. Um, uh, but tell us a little bit about what streaming actually is. I mean, just as a sort of a quick aside, some people sort of bracket royalties and streaming together, but that's not really how you guys do it, is it? So what is streaming and why is it different from royalties?
Well, exactly. Royalties have been around for a very long time, and they're basically a registration on land, and you get a share of the revenue that comes from that. And it's not a contractual partnership; it's a registration on land, and so the rights in a royalty are pretty limited. And to be honest, because you're paid in cash or check or however you're paid in currency, it's considered passively managed. So we created the streaming model 21 years ago now. In 2004, we did our first ever streams. And it was a new business model that came forward. What makes a stream unique is that we're actually purchasing a percentage of a metal. And most mines out there produce multiple metals. Even most copper mines will produce a bit of byproduct gold, a bit of byproduct silver. Most lead zinc mines produce quite a bit of silver. Gold mines generally have a little bit of silver as a byproduct, and same with nickel mines and such. What we started doing was focusing on purchasing the rights to a percentage of a particular metal, a non-core byproduct. So, as I said, we started back in 2004. We really created this business model because at that time I was working for a company called Goldcorp, which at its peak was the largest gold company in the world. Since been swallowed up by Newmont, but at its peak, in terms of get to that size, we needed to raise capital to continue growing our gold-focused business. And within Goldcorp, we had a bunch of byproduct silver production at some of our mines. And so we organized the first ever stream and created the first ever streaming company called, at that time, Silver Wheaton. And for the first 10 years, we focused on doing silver streams, going around to different lead zinc mines, different copper mines, different gold mines, and purchasing the rights to byproduct silver production from these mines. And the way a stream works is it's basically a contractual partnership. It's a contract, it's a relationship with the operating company, the operating entity, in terms of defining how much money we pay up for the contract. There's always a large capital amount that we pay to get the rights to the contract, and then how much we pay on a per ounce basis going forward for the life of the mine. These contracts are generally life of mine. They run as long as the mine produces. We get that share of metal. And so most of our early contracts were done with a fixed price on a per ounce basis, and more recent contracts are done with a fixed margin of typically around 80%. And so our production payment is 20%. So the way it works is as a mine begins production and starts operating and produces a bunch of copper concentrate, maybe with a bit of gold byproduct or a bit of silver concentrate, or silver byproduct in that concentrate, they will deliver, if we have the rights to say 50% of the gold or 75% of the silver or whatever, they will deliver that share of metal to us directly. And we do get it in ounce form. Sometimes it's ounces in a trading platform, so we don't actually take physical delivery. But in every one of our contracts, we have the ability to take physical delivery if we so desire. We just choose not to because it's complicated and security is a bit of an issue and so on. So we take it in digital form and then we turn around and sell it. But when we get delivery of that, we'll make a production payment. And so the business model, the simplicity is relatively sometimes confusing because it is so simple. We purchase the right to get silver and gold from these mines at a fixed price per ounce on a go-forward basis. And it's either a fixed price or a fixed margin, but either way, a good example is our flagship mine, the Salobo mine down in Brazil, which is a huge copper mine that Vale operates within Brazil, where over the course of 3 different stages in the contract, we now get 75% of whatever gold that mine produces forever. And when that gold is delivered to us, we make a fixed production payment of right now about $450 per ounce. Now, with gold breaking well through $3,000 here, especially today, strongly today, you can imagine our profits on every ounce is pretty close to $2,600 on a per ounce basis. And so we do very well for that. But for that right, we actually contributed about $3.1 million, or sorry, $3.1 billion to Vale to help them build that mine on a go-forward basis. So from Vale's perspective, they had to invest very little capital because we supplied the bulk of the capital to get that mine built. Ultimately, it cost about $4 billion to get it built. We supplied 75% of the capital to get that mine built. But for that, we get 75% of whatever gold this copper mine produces. Last year, it delivered 280,000 ounces of gold to us. It's, so it's a very strong business model. The real attraction to investors is that we don't have cost risk. Our cost is defined in these contracts. The capital cost is the amount that we pay for the original contract. In the case of the Salobo mine, the $3.1 billion to get this. And the operating cost is defined in the contract. In the case of the Salobo mine with Vale, right now it's about $450 an ounce. It goes up by 1% every year forever. And of course, that confidence is what makes us very, very attractive from an investing perspective, because the mining industry is filled with broken promises on costs and capital costs and operating costs. You don't have that risk with the streaming company. You don't have that risk with Wheaton.
So let's talk about risk in general then. I mean, you talk about cost risk, but the great attraction of the Wheaton Precious Metals model really is that risk is mitigated in sort of many different directions, isn't it? I mean, there's a small part of your website or a line on your website where you talk about how you're mitigating risk by concentrating on safe political jurisdictions. And there's also the fact that you guys don't really incur the operational risks or even political risks.
Mhm.
So in a sense, you're sort of knocking out risk on several levels. Is that a fair sort of way of looking at it?
Very fair way of looking at it. We're a company that's approaching $40 billion US in market cap, and we have 42 employees. We don't operate the mines. Our head office is in Vancouver, Canada, but we spend a lot of time, or we've got 46 assets spread all around the world in pretty well every jurisdiction, or every continent at least. Nothing actually in Asia now that I think of it, but we do have Australia, Africa, Europe, but heavily concentrated in North and South America. Keep in mind that the first 10 years of our company, we were focused on silver, and most silver comes from Mexico and Peru. So both of those countries, we still have a lot of assets that are delivering us silver and now gold. But now that we've expanded into the gold space, we've now spread last year. In the last couple of years, we've spread into Australia and into Africa, and we've had assets in Europe for quite a while, but now looking at other assets and so on. So it is really about risk management and trying to minimize the exposure that our shareholders get, and some of that comes from the jurisdictions that we work in. Some of it comes from how we structure the contracts. Every one of these partnerships will have parent guarantees that keep the political risk where it should be, which is with the operating company. The operating entity is the one that has the relationship with the regulators and with the local communities. And so, we structure these contracts to make sure that risk does stay with the operators themselves, where it's best placed. And then we do everything we can to help those operators be successful. We were the first of the streaming and/or royalty companies to start co-contributing towards sustainability initiatives and funds, because we recognized how important it is that our partners have strong social license. And so if they don't have strong social license and they don't produce, we might get 75% of the gold, but if the mine shut down, 75% of nothing is nothing. We don't want that to happen. So we really strive. And I think that's one of the things that makes Wheaton unique, is we put a lot of effort into trying to help our partners be stronger, because the stronger our partners are, the stronger we are. And that goes a long ways to reducing risk.
Is there anywhere you wouldn't invest?
Oh, definitely. Lots of locations. There's many countries in Africa. There's even countries in South America. Countries in Asia. Russia's out of bounds. China, anywhere where we don't have confidence in terms of the rule of law and fair representation in the court system. So, as a Canadian company that has international nets all around, it is something that's very, very important to us. There are ways we can mitigate it through parent guarantees, we can sometimes go into some riskier jurisdictions and have the confidence of that broader parent guarantee to protect our interests from a political risk perspective. But we're pretty sensitive to that. And if we do step into politically riskier jurisdictions, we're always going to look for a much higher rate of return to offset that risk.
Yeah, I mean, you mentioned Africa. You have got some West African what should we call them? Streams, I suppose. You've got some West African streams. So what's your thinking on those? I mean, London is where we are now is sort of quite focused and expert in investing in Africa. So there might be some interest in hearing about your thoughts about the West African opportunities that you have and that you see.
Yeah, and it's actually probably one of our more exciting recent transactions. So we have one stream in Western Africa, we have one stream in Eastern Africa, and we have one stream in Southern Africa. The Southern African asset is an asset that's very well known. Ivanhoe is developing the Platreef project, which is a platinum palladium deep project, but it is a disruptor in the platinum palladium space. And when it gets up and running, its cost base will be so low that it's going to entirely consume the bottom quartile of the cost curve, and it's going to push a lot of very marginal operations probably into hibernation for a while and cause them to be swing producers depending on what the price of platinum and palladium is. And so that asset's moving forward nicely. The Ivanhoe team is pushing it forward. Pretty excited because by 2029, 2030, it's going to be a significant part of the platinum palladium space. Our stream is actually byproduct gold from that asset, along with a little bit of platinum and palladium. But the bulk of our value is actually tied to a non-core byproduct gold production from this platinum and palladium mine. The one in West Africa that's worth talking about is the Montage Gold asset. It's called Koné, and it's in Côte d'Ivoire. And again, I think jurisdiction is something that's very important. There's countries in West Africa that aren't investable from our perspective right now, but Côte d'Ivoire is investable. It's a good, strong jurisdiction. The location of the Koné project is also part of the reason that we're so confident in terms of it being stable. It's in a very stable part of Côte d'Ivoire in the northern region, which has had good, strong, stable politicals environment and community environment for a very long time. And so the asset itself, as I said, it's owned by Montage Gold. The team that's building it, Martino and Petter, it's a group that has plenty of experience with Endeavour Mining in West Africa, and so they're a good, strong team going forward. And this is an exciting project for us because it's one of our first streams where we supplied just about all of the project financing. I would say probably 90% of the project financing came through our streaming mechanism, and so it's a good asset that when it's up and running by 2027, will be delivering around 60,000 ounces of gold to us on our for at least 7 or 8 years, and then dropping down to a lower level in the future. But it's an asset that we think is going to move the needle for us and adding even more to our already very strong growth profile. The third asset in Africa is the Kurmuk project, which is being developed and built by Allied Gold in Ethiopia. And it's very close to the new Grand Renaissance hydroelectric project dam up on the upper reaches of the Blue Nile that is going to truly transform Ethiopia. The energy that's being already produced by the Grand Renaissance Dam is going to allow a lot of sustainable development and support industry coming into Ethiopia and I think really sort of help change the standard of living in large parts of Ethiopia just by access to cheap energy, cheap and reliable energy through the dam itself. So the Kurmuk project is definitely one that Allied has lots of exploration potential on, and we're excited about this one moving forward. Peter Maroney is a long time and his team, lots of experience in the mining space, and lots of other experience within Africa, other assets within Africa. Kurmuk, we think, is going to become one of their flagships, and it's also going to be a good portion of our growth on a go-forward basis. So we're quite excited to be in Africa, but it does really depend on which jurisdiction, which country, and which community. You can't just stop political risk assessments at the country level. You do have to study the communities and the regions where the mines are to make sure that you're also dealing with stable environments.
And things change too, as well, I suppose. I mean, not many people were going to Ethiopia 15 years ago, and now it still has its issues, but it seems to be sort of coming good, I would say, or at least improving.
Yeah, I mean, based on what I've seen, there was some funding going. Egypt, I don't think was ever very happy about the dam being built in the upper waters of the Nile and was quite
Yeah.
concerned about this. They did their best to try and disrupt the political environments within Ethiopia, and I don't think any of that's worth really discussing on this platform. But the fact in the last few months we've actually seen great progress with some stabilization agreements being signed with Ethiopia's neighbors, and I think things have actually dramatically improved there just even within the last few months.
And so, what's your view of sort of South America as a continent these days? I mean, you mentioned a few minutes ago that that's where Silver Wheaton sort of started, and you guys, as Wheaton Precious Metals, have got a sort of predominance of your assets in South America in terms of production, I would say. Perhaps you'll, I mean, there's obviously the sort of one or two that you've got in North America as well, and also a significant number of sort of development streams in South America too. So,
Mhm.
as a continent, you obviously like it, but are there any sort of favorite jurisdictions there?
Well, I mean, I can't say enough good things about Brazil as a country, but also our partner there, Vale, which is obviously the flagship mining entity, the main mining entity within Brazil itself. The Salobo mine is core to us. It generates close to 40% of our cash flow, and it's such a strong flagship that it's also the flagship of Vale Base Metals. Most people know Vale for its iron ore production. Its extensive iron ore production. More than 80% of the revenue comes from the iron ore area. But Vale is such a large company that they have some incredible copper and nickel assets around the world, and a lot of them within Brazil itself. And so, we're very comfortable with Brazil. We think that having Brazil has got a long, long history of respecting and recognizing the importance of responsible resource development and operations. And so, Vale as a partner in Brazil, we're very, very comfortable there. Our second biggest asset is Antamina, which is in Peru. We get silver there. We get Glencore's share of the silver there. Glencore owns, I think it's 32.75% of the mine, and we get their share of silver for, again, life of mine, as long as that mine operates. And so, again, Antamina is an incredible world-class asset that has, decades and decades of reserves and resources in front of it. It just keeps on seeming to be getting better. Their exploration success here keeps on adding and replacing everything that's been consumed, and it'll be a mine producing, 50 years from now. There's no doubt in my mind. And then, of course, Peñasquito in Mexico. Mexico's had some challenge more lately, but it is typically a country that really does respect, again, the importance of mining, similar to both Peru and Brazil. They've had some challenges of late, but I think in today's world, as we see, political uncertainty and deglobalization seem to take its trend, I think countries are getting more and more focused on ensuring that they have access to their own resources, and we're starting to see that tide turn in places like Mexico, and more support for the resource industry. So, South America as a whole, great opportunities. The Andes themselves, in terms of the porphyries and the associated other types of ore bodies that you can find in there. And then you've got Brazil and the Guiana Shield, which is all old rocks that originally broke off from Africa, and where you don't see a lot of silver, but you see some incredible gold and copper ore bodies that have gold credits. And so the entire continent has great geological potential. You just have to be careful in certain jurisdictions. Venezuela is definitely out of bounds for us. Panama, our peers aren't having good success in Panama right now. Bolivia has been on and off, sometimes a good asset. Argentina, we're still waiting for strong support down on the Navidad project, where we have a stream, and waiting for that project to get its permits and move forward. And so each country is a bit unique, but South America, the geological potential and the rights that you have in most of those jurisdictions is a very right place for us to continue growing our company.
So, what do you think about the commodities environment that we're in then, Randy? Because I mean, you talked about Argentina there, and we were sort of creeping up towards the USA with Mexico, but it's all about tariffs, Trump, various sort of geopolitical factors coming in. There's
Mhm.
wars here and there. I mean, the gold price is obviously at a wonderfully high level for a company like yours, but that occurs in a sort of broader context. So, what do you think about how the current US president is going to affect the gold price? And perhaps if you don't want to address that directly, because it's quite a hot potato, what do you just think about where the gold price is going?
Well, quite simply, I would describe gold as a comfort metal. Gold
Yeah.
is where people go in times of distress when they need to find comfort. And so in times like this, we're always going to see a rush towards the comfort metals, right? And so the unknown that is and and definitely there's a lot of unknowns now. We seem to every day come up with some different direction. We're a Canadian company. How close have we come to being so-called? I'm getting tired of being referred to as the 51st state. Personally, I think Canada deserves at least 10 states. We've got 10 provinces, so you have to laugh at it, but there is an impact. And being in the precious metals business, the impact is a net positive. Now, unfortunately, it's because of the geopolitical and the trade barriers and the trade stress that we see that it becomes a net positive for us. Because, as I said, the attraction of precious metals and particularly gold is no doubt even stronger. The biggest challenge with the U.S. dollar is that for the longest time, it's represented the reference currency for trade around the world, mainly because most people were confident that it was abject of political influence. But what we have seen is that it's not objective. It is subject to political influence. And that's one of the reasons why we've seen such a push on gold prices, because we're seeing countries, central banks all around the world, and that's really what started this rise in gold prices, is they are swapping out of US dollars and into gold. And it's a movement that hasn't slowed down. It's maintained strength now for 4 years, but I think it's now sort of being almost contagious into a broader investing space. And the appetite that we've had as a streaming company, a very low risk way to explore the gold space where you don't have any of the exposure. We've never seen such levels of interest.
Yeah, it is amazing. So, I mean, where do you think we go from here, though? You guys, well, let me ask you this actually. Your portfolio, how much of it is gold? How much of it is silver? And I believe you've got some cobalt and uh,
Palladium. Yeah. So we're about just around 60, a little bit over 60% gold revenue, about 35 to 40% silver revenue, and we've got a pinch of palladium and a pinch of cobalt. I think together they represent about 2% of our revenue. So cobalt is it's not a precious metal, but it's the most precious of the base metals. We have a stream with Vale on their Voisey's Bay mine in northern Canada. It's the cleanest, greenest, most environmentally sound, most socially responsible cobalt produced in the world. It's Canadian cobalt, and on a brand new mine that's got pretty high standards applied to it. And so it's an asset that we're comfortable having in our portfolio, but we are focused on precious metals. And yeah, so as I said, 60% gold, about 38% silver, and 2% palladium and cobalt.
and are your streams always on the secondary production from mines, or do you take for primary production at all as well?
Rarely. I mean, I will say the Montage gold deal on the Koné project in Côte d'Ivoire that I was just describing, that's a gold stream on a gold mine. And
Right.
so, when we originally set up the streaming model, the focus was byproduct, non-core byproduct production, because we felt that the operators would be apt to sell off a non-core byproduct and crystallize that value to help build the mine on a go-forward basis and help fund their own capital needs. It turns out that streaming is such an attractive source of capital that now we're starting to see streams on primary products, and gold companies are coming to us because our cost of capital is so attractive compared to other forms. The equity markets have not been supportive, especially for smaller companies in terms of trying to advance and raise money through issuing shares. Most of these companies trade at significant discounts to net asset value. when we do a stream, we essentially pay net asset value, if not a little bit less, but very close. And that's the attraction to a lot of these smaller single asset startups or smaller development companies. The larger companies right now, most of them are doing very well in terms of internal cash flows, and so they don't really have a need for outside cash flow and or outside capital because they've been able to source and internally source capital to build and fund their own growth. So yeah, that's the market for us is typically, I mean, right now we're seeing with these gold prices, we're seeing a lot of gold projects go forward into development. And so I'd say more than half of what we're looking at is gold streams on gold mines. It's pretty rare for us. 60% of our production currently comes from copper mines. And it's gold and silver as a byproduct from those copper mines. And so there's no doubt the copper industry is very big to us. But when it comes to funding construction, we're not seeing companies build copper. Copper prices just aren't high enough to justify construction yet. That time will come. There is a demand for copper that is beyond what's available right now. And so eventually prices will climb, and all of a sudden you'll start seeing some copper developments, and then we'll be doing gold streams and silver streams on copper mines.
Would you ever do a copper stream?
We wouldn't do it directly, but we would, and we have had discussions in the past in terms of helping a company get to a level if we've already taken all the precious metals we can from a mine, but they still need some more capital to get the mine built. We would do an ancillary copper stream, but we would never do a primary copper stream. As the name implies, Wheaton Precious Metals, we are focused on trying to stay pure precious metals. We think it's a way to differentiate ourselves from our peers. Our biggest rival or our biggest competitor is Franco-Nevada. They have a lot of iron ore and oil and gas production that, unfortunately gets valued like it's a precious metal. Last time I checked, oil and gas and iron ore is not a precious metal. And so it's very expensive for investors to buy that. Our objective is to differentiate ourselves by staying pure precious metals.
Yeah, I mean, Franco-Nevada, big name, isn't it? But it's not quite the same as you guys. I mean, so you were talking about how you came up with the streaming idea with the Goldcorp deal. I mean, you sort of made it sound quite easy, but I imagine there was some serious brain power kind of went into that, that process, developing a kind of entirely new mining. I mean, now it sort of seems like, yeah, of course, that's, what you would do, but, it's only because you guys did that, I guess. So
Right.
Tell us a little bit about how, who and what put it together.
Well, Ian Telfer was really the architect of taking Goldcorp to its peaks. Ian Telfer is a mentor of mine. He's still a very good friend of mine. I have immense respect for the value that he was able to create and the attention he was able to bring. His timing was perfect. He came back into the gold space in the year 2000 as part of the original Wheaton River Minerals, which is a predecessor to Goldcorp. And I was working at Wheaton River Minerals at that time I'm a geological engineer by background, and so I was working as a project manager, actually as a project manager and mine manager for a small little mine that we had in northern Canada. And Ian and I hit it off, and so we had an incredible time between 2000 and 2007 taking Goldcorp to new levels. And one of those ideas, and Ian definitely gets the credit for this, was the concept of streaming and raising some money for Goldcorp by selling our silver production, our non-core byproduct silver production, into this entity called Silver Wheaton. To be honest, my current chairman, George Brack, was one of the rare investment bankers at the time who saw the brilliance of the model. And we were, of course, totally focused on growing Goldcorp. So we had this subsidiary company that we created called Silver Wheaton, which immediately became a stock market darling because it was a profitable silver company. At that point in time, silver was still trading down around $6 an ounce, and none of the silver companies were profitable. And all of a sudden, we created a company that was actually profitable silver production, or had profitable silver production, albeit through a stream. And so George Brack, to be honest, for the first 3 years, he was the banker that kept on calling me up saying, "Hey, I've got this silver stream for you." "Oh yeah, Silver Wheaton." We'd think about it on weekends. And it really took us 3 years to sort of recognize the real value of what we'd created. And so in 2007, I swung over to Silver Wheaton on a full-time basis to manage corporate development and start focusing on the silver side. By 2011, I'd taken over as the CEO. And at that point, as soon as I took over as CEO, I expanded into the gold space because by that point, Goldcorp had sold off all of its equity interest. altogether generated close to $4 billion in value for Goldcorp to invest back into its own growth. So it was probably the largest single contributor in terms of capital towards Goldcorp's ultimate success in ultimately becoming at one point the largest gold company in the world. But yeah, 2011 was when we decided to swing over and start focusing on precious metals, mainly because where I wanted to go, there just wasn't enough opportunities in the silver space. And I still look at that now. My favorite commodity, silver. I think it's the best place to invest. But the challenge is one of the appeals of investing into silver is there's not a lot of new silver production. We saw peak silver production about 2017. We peaked it around, I think it was 950 million ounces a year. We're now down somewhere in the 700 million ounce a year range, and industrial demand keeps on pushing up. More and more high efficiency electronics wanting silver to try and improve how long your batteries last, your processing power, antibacterial applications. In today's world, post-COVID, how important is that? And so demand for silver continues to grow, and yet where's the supply coming from? And so we are getting tighter and tighter. And now with some of the trade concerns, we're going through a bit of a silver squeeze right now. And silver should be the outperformer. We still haven't seen the retailers and investors come back in and acquire the, as I call it, the affordable precious metal. But that time will come, and we'll see. Silver typically does outperform gold. And we'll see that, and that will hopefully then stimulate some investments in the space, because we're just, the bulk of our growth in the last 10 years, 80% of our growth has been in the gold space. That's the opportunity set that we're dealing with, and I'd love to have more silver, but there's just not the opportunities out there.
I suppose the Mexican focus is a kind of legacy of the silver, the initial focus on silver when you guys were starting out, and then so you became Wheaton Precious Metals, I suppose, at some point during that period,
Mhm.
right?
Yeah, well, our first big gold stream was the Salobo mine down in Brazil, along with Hudbay. We did a stream, help them build the, well, 777, but Constancia was the mine down in Peru that Hudbay was running. And so we did both of those deals in 2013. And quickly, as we continued to add more and more gold streams, and again, the opportunity set just seemed to lend itself more towards gold. We recognized that the name Silver Wheaton was a bit misleading, and we weren't even being classed in gold discussions, where here we are producing more gold than our peers, and now, by far now the largest of the streaming companies. And when you look at the amount of precious metals we produce, substantially more than our peers. Both Franco and Royal Gold are the two biggest competitors we have. And so, yeah, the growth that we've had in gold has definitely, forced us down the path. So we changed the name. I think it was 2016. We changed the name to Wheaton Precious Metals, keeping the Wheaton name mainly, the heritage that comes from the original Wheaton River and the first mine. It's part of my history all the way back into the 1980s, 1990s. But it was a very small scale but profitable mine, and I just underscore how important quality of technical decisions are. I mean, it's a reputation that we've strived to maintain. I'm a geological engineer by background. I started in this industry as an exploration geologist. I had some early success that allowed me to take a mine all the way from exploration success into production, and got my hands on the first gold bar coming out from a trench that I had dug and taken the first sample out of, right? And so to have that experience and that exposure, incredibly fortunate, and that all the way forward to what we've built now, and just the growth profile that we have on a go forward basis. It's such an exciting time for us, I think with the appetite of today's world, the lack of risk in the streaming, plus the growth that we have, makes us one of the most attractive ways to invest into the space.
Well, let's talk about that growth profile in a minute. But before we do, I just want to ask you what happened to that mine well, I guess you sampled, trenched, and then eventually touched the
Did
actual gold. What happened to it?
did the pre-feasibility, did the feasibility,
Right.
did the construction, became the project manager. Went from exploration manager to project manager to mine manager, assistant mine manager. I did have a guy that we cross-shifted each other. It was a remote mine site. Stood in the pit and wondered what I was thinking when I built the original block model. Had to, couldn't point the finger anywhere but myself. But Ultimately, we were producing gold, but I think we peaked at about 100,000 ounces a year at a cash cost of around $120 an ounce. And so gold in the 90s was down as low as $265 an ounce. We were still profitable. And it just sort of highlights quality, focusing on quality and margins. And it's one of the things that we've really focused on at Wheaton. I've never lost that focus in my entire. And so small scale mine, but very profitable, and ultimately generated enough capital to attract Ian Telfer to come in and become the new CEO of Wheaton and take it and build it into this great grand empire that we've turned it into. So it's
Right.
it's an incredible story. We just published a 20-year anniversary book, which is a great read. So
Oh, is it like a history of the Wheaton, the various Wheatons?
yes, exactly.
Oh, that
Various
sounds
Wheatons.
interesting. Perhaps we'd be able to link to that. Is that available on Amazon, or where can we get it?
We haven't right now. It's internal, but the demand has actually been pretty high for it. So we may look at actually getting it out commercial. So
I'm sure you
um,
get plenty of takers. So we
yeah.
mentioned growth a minute ago. What you sort of just coined the phrase growth profile. What are you talking about when you talk about the growth profile for Wheaton Precious Metals?
Well, we've been the most active of all the streaming and royalty companies over the last 5, 10 years. We're making more acquisitions than anyone else in scale and size, the number of them, and the total value. But most of it's development projects, construction projects, funding new mines. We are now starting to reap the benefit of those investments. We have a number of new assets that are this close to, in fact, we've already seen production from one of them, but we've got 9 new mines coming on stream within the next 3 years. And that combined with some organic growth that are existing assets means that we now have the strongest growth profile in the entire precious metal space, especially from a diversified portfolio. In 2024, we had 18 mines delivering us metal. 2025, by the end of 25, we'll be at 22 mines. By the end of 2026, we'll be at 26 mines, and then a 27th mine coming on stream in 2027. And so that growth and the quantum, 2024, we just released our year-end results. Our production was about 635,000 gold equivalent ounces. By 2029, we'll be at about 870,000 gold equivalent ounces. And what I find particularly exciting is that we've got a number of other projects that are still waiting for their final permits and construction decisions. They're going to be coming out in years 6 to 10. So that's years, 2030 to 2034. And that'll take us up over 950. Well, we'll average about 950,000 gold equivalent ounces. My personal objective has always been to take Wheaton to 1 million gold equivalent ounces per year of production. This is an area that no streaming or royalty company has ever been. We're already to that level in terms of precious metals production. We're taking it to a next level in terms of scale, size, and quality. And we've been able to do this on a portfolio of, and what's one of the things that's really important for us in terms of measuring quality, or the quality of an asset, is where does the asset fit from our partner's perspective? Is it a first quartile asset in the copper space? Is it a second quartile? Because we've been really focused on trying to stay with a high quality portfolio. And we judge quality by not where our margins are, but by where our partners' margins are. Because those high margins that our operating partners get mean that they will do everything to keep that asset running if there's challenges or problems, environmental issues, climate issues, political issues. On top of that, it's also the first place that partners reinvest their exploration capital and their expansion capital. If a mine is a high margin mine, they're going to continue to grow that mine, to try and do exploration to continue going forward. And so currently 83% of our production comes from the bottom half of the representative cost curve. So high quality mines. And now we have this incredible growth cycle that, as I said, by 2031, in fact, the year 2031 currently breaches over 1 million gold equivalent ounces per year from our current 635. That's like 60% growth from where we are right now. And the bulk of that, and there's still some construction funding that'll be coming, but this year, our cash flows this year at current spot prices will be well over $1 billion, probably about $1.4 billion in cash. We've got about 1.7 billion in commitments over the next couple of years to help fund this construction on a go-forward basis. Um, and we've got, as of year end, close to $900 million cash on hand and zero debt. And so the balance sheet is incredibly strong. The opportunity set is still very strong. There's a lot of, with these gold prices, there's a lot of people that are looking to build gold mines on a go-forward basis, and we're there to help them out. So I'm confident we'll be able to add even additional growth beyond this. But the growth profile is sector leading in the entire precious metal space. And keep in mind, it's all based on streaming contracts, which have much lower risk. You don't have that cost risk. So important.
Yeah, risk. We started out with that. So you may do more streaming deals. I mean, one of the attractions I think that it's probably obvious, but I'll spell it out and just to make sure you don't correct me. One of the attractions of Wheaton Precious Metals to potential partners is that actually you do have a big war chest, as they say. You know, you can deploy a huge amount of capital, you know, if the deal merits it. And we've seen that in your transactions in the past. I mean, hundreds of millions of dollars is, you know, standard for you guys. And
Mhm.
not everybody can kind of deliver that kind of money. So you were just talking about the numbers just then, just in your previous comments. I mean, if you were to see a couple of opportunities running in parallel rather than sequence, would you take on debt to, to to do those
We
transactions?
would, and again, that's one of the things that differentiates us from our peers. Our peers typically issue equity to try and get through those high capital demand areas. Our preference is debt, mainly because debt is finite, and so basically from 2016 through till about 2021, we peaked at about 1.5 billion in debt, and our cash flows were anywhere from 600 to 800 million a year, and so there was some concern from some shareholders about the debt levels and such, but we stuck to that and did not issue shares because we didn't want to dilute our existing shareholder base. And if we had taken an alternative approach and issued equity to try and solve that debt, which we felt was easily manageable, keep in mind we have fixed cost, and so our margins are typically 75 to 80%. And so if you've got that kind of margins, you can manage debt very well. You've got lots of capacity to manage debt. We ultimately paid off that debt in early 2021. If we had issued equity, we would have had 16% more shares issued and outstanding than what we currently do have. So in my eyes, the approach of issuing equity is permanent, right? That's the problem. And you can turn around, buy it back, and argue down that path, but it's not something that happens a lot in this industry. Our preference is to focus on returns more through dividends and such. And so yeah, that 16%, the way I look at it, because of us using that debt, our shareholders are 16% richer than they would have been alternatively. And so we're not scared of using debt. We think that for a streaming company, it actually works very well because it's such a high margin business. And again, it minimizes dilution. And I personally think that we will never issue a share again in this company from a financing perspective. We're now to the point where last year we surpassed our cumulative cash flows have actually surpassed all of our commitments in there, and we have 60 years of reserves and resources in front of us, and so we're in great shape. And my biggest challenge is how do I continue to put the cash flow back to work? What I can assure our shareholders, both existing, future, and future shareholders, is that if I can't spend it buying ounces in the ground, then it goes into the dividend or back to shareholders, and there will be growth in the dividend.
So what is the Wheaton Precious Metals approach to dividends then?
Quite literally, it's if we can't put it in the ground, it goes into the dividend. And so we're not a fan of special dividends. We're just what we've committed to is regular growth, and so a progressive approach in terms of anteing up more. Our business works very well, even if we were to spin back, 40 to 50% of the cash back to our shareholders through the dividend. Currently, we're only giving about probably between 20 and 25% of our revenue back to the shareholders in the dividend, mainly because we've been able to find good projects to invest into. But if you run short on that and the cash balance gets high and the balance sheet gets a little bit lazy, then it's time to ante up the dividend and start feeding more of it back. And that's the approach we have. We'll continue to look for opportunities. That's what I feel we're paid to do, is continue to try and find ways to invest in the ground. I'm not a believer in dollars. I'd rather have a balance sheet right down around zero. In fact, I'd prefer to have a bit of debt because I think gold's a better investment than dollars. And so unfortunately, our focus on accretive acquisitions for a good value means that it's sometimes tough to put that money to work effectively, but we're going to focus on that accretiveness and maintain that all the way through. So yeah, the dividend will grow. I think the best way to indicate how fast it will grow will be how much cash we have on hand towards the end of the year, and offsetting for whatever commitments we might have in terms of funding future construction. Because most of our contracts, we drip feed the capital over the construction period as it goes. So we do have some future commitments, as I mentioned, about 1.7 billion over the next 2.5 years, call it 3 years. And so yeah, I know there's going to be growth. I know at some point it's going to, as we get up to 1 million gold equivalent ounces per year, it's going to be substantial growth. And so there's no other place to put it but back to the shareholders.
I mean, it is quite something, isn't it? That 1 million gold equivalent ounces number. I mean, a real sort of milestone in the industry, really.
Well, I remember in 2007 coming over to Silver Wheaton at that time on a full-time basis and sort of trying to set some goals. And of course, at that time we were focused on the silver side, and so I had sort of set myself a goal of getting to the 50 million silver ounces, and just about all our streams. In fact, all of our streams were silver at that point. We was looking for 50 million silver ounces a year. We're not going to be too far off of that, right? And so yeah, it is something that I'm really excited to, because it's been a personal goal of mine, and like I said, a level that we've never seen before.
Well, it's going to be fascinating to watch. We really appreciate you joining us today, Randy, and good luck with the rest of your trip to the UK, and good luck with the Wheaton Precious Metals and all it undertakes.
Alistair, thank you so much for the opportunity. And we've listed in London back in 2022, I think it was, right in the depths of COVID. It wasn't the greatest opening ceremony or listing ceremony we've ever had, but London's very close to our heart in terms of a place where, and we think that our business model is something that doesn't exist here, listed in London at least. And so we think we have a role to play in terms of helping investors here get access to low risk precious metals production.
Yeah, and we're a bit short of large mining companies in London. It's good to have you guys join us.
Yeah. Well, there's an opportunity here. Thank you.
Great. All right. Well, thanks very much, Randy. Good
Yeah.
luck.
Thank you, Alistair. Cheers.